The downtown branch of Dominion Trust Bank prided itself on appearances. Polished marble floors reflected ceiling lights like still water. Glass walls separated executives from customers, not just physically but symbolically, reminding everyone who mattered and who merely passed through. Every sound echoed with authority, heels clicking, printers humming, keyboards tapping with quiet importance. It was a place where money spoke fluently, and silence often meant insignificance. At precisely 11:17 a.m., the glass doors slid open again. No one noticed at first. The man who entered wore a charcoal hoodie, faded jeans, and simple leather shoes that had seen years of wear. There was nothing flashy about him. No watch worth admiring. No entourage. No hurried confidence that announced power before a word was spoken. He paused just inside the doorway, letting the doors close behind him, his eyes adjusting to the sterile brightness. People assumed he was lost. A receptionist glanced up, assessed him in half a second, then looked back down at her screen. Two customers in tailored suits whispered near the waiting area, their attention flickering briefly toward him before dismissing him as irrelevant. The security guard near the entrance shifted his weight, watching the man with mild suspicion rather than concern. The man walked forward anyway. He stood patiently in line, hands relaxed at his sides, breathing evenly. He did not check his phone. He did not fidget. He simply waited, observing the quiet theater of wealth around him. The way confidence sat differently on those who borrowed it versus those who owned it. The way voices softened when numbers grew larger. The way respect was preemptively given to polished shoes and tailored jackets. When it was his turn, he stepped up to the counter. The bank manager on duty that morning was named Richard Hale, a man who believed deeply in hierarchy. Richard had spent 20 years climbing from teller to manager, and the position fit him like a crown he polished daily. He glanced up, eyes already narrowing, scanning the hoodie, the jeans, the absence of cues he bravadoed as worth. "Yes," Richard said, not unkindly but not warmly either. "I'd like to deposit a check," the man replied. His voice was calm, unremarkable, steady. Richard extended his hand with practiced boredom. The man placed the check on the counter. Richard glanced at it once, then again, slower this time. His eyebrows lifted slightly, then his mouth curled into something between disbelief and amusement. "This amount?" Richard asked. "Yes," the man said. Richard let out a short laugh, sharp enough to draw attention. A woman filling out a deposit slip nearby looked up. A man seated in the waiting area leaned forward slightly, curious. "Sir," Richard said, tapping the check with one finger, "this is a very large sum of money." "I know." Richard leaned back in his chair. "And you're saying this check is legitimate?" "That's correct." Another laugh escaped Richard, louder this time. "I'm sorry, but we see fraudulent checks like this more often than you'd think. Usually from people who don't understand how these things work." The man did not react. Richard lifted the check slightly, angling it so the light caught the printed numbers. "This is not something you walk in with dressed like this." A ripple of quiet amusement passed through the nearby customers. No one intervened. No one questioned the assumption. The room seemed to accept the verdict before evidence was considered. "Please verify it," the man said. Something about the request irritated Richard. Perhaps it was the lack of embarrassment, the refusal to shrink. Richard sighed dramatically and turned to his computer. "Fine," he muttered. "We'll verify it." His fingers moved quickly at first, entering the routing number, the account details. He expected the system to flag it immediately, to validate his judgment. He expected satisfaction. Instead, the screen paused. Richard frowned. The system loaded. Then loaded again. His smile faded. He leaned closer to the monitor, eyes scanning numbers that didn't align with his expectations. The balance displayed was staggering. Not just high, but layered, structured, distributed across holdings that spoke of scale beyond personal wealth. Richard swallowed. He refreshed the page. The numbers did not change. He clicked deeper into the account profile. Corporate affiliations populated the screen. Investment vehicles, subsidiaries, international accounts. Each line confirmed what the previous one implied. This was no mistake. Richard felt heat rise in his face. His chest tightened as realization settled heavily in his gut. The name on the account was unfamiliar to the public, but not to those who understood the architecture of power. Quiet ownership. Strategic distance. Influence without spectacle. The man across the counter watched him patiently. The room felt suddenly smaller. Richard stood up abruptly, his chair scraping loudly against the floor. Conversations around them stopped. The security guard took a step closer, confused by the shift in energy. Richard began, then stopped. He cleared his throat. Sir, I apologize. There seems to have been an error. The man tilted his head slightly. There was no error. Richard's hands trembled as he held the check again, this time as if it were fragile. Please accept my apologies. If you'd like, I can have our regional director come down immediately. The man shook his head slowly. You laughed before you checked, he said. You decided before you knew. Silence wrapped the room. I'll take my business elsewhere. Richard opened his mouth to protest, to recover, to salvage what little dignity remained, but the man had already turned away. As the glass doors slid open and closed behind him, the bank stood frozen, left with polished floors, shattered assumptions, and the echo of a power they failed to recognize. The moment the billionaire stepped onto the sidewalk, the air felt different, as if the city itself had exhaled. Inside Dominion Trust, the air grew thick with panic. Richard Hale remained standing behind the counter, staring at the closed doors like they might reopen and undo what had just happened. Customers pretended to return to their business, but their eyes kept lifting, hungry for details. Richard, a teller whispered from the next station. Who was that? Richard didn't answer. His tongue felt heavy. He was still seeing those numbers, those holdings, that quiet kind of wealth that did not need to announce itself. He snapped the check drawer shut with more force than necessary and straightened his tie as if fabric could restore authority. Back to work, he said, voice strained. Work was impossible now. Every second the billionaire walked away was a second the bank lost more than a deposit. It lost face. It lost the illusion that Dominion Trust controlled outcomes. Richard moved toward his office, forcing his feet to keep a manager's pace. He shut the door and locked it, then stared at the framed mission statement on the wall. Integrity. Discretion. Excellence. The words looked like a joke. He pulled up the account again, hands sweating on the mouse. The client profile carried internal flags in red. Private tier. Obsidian. Contact protocol. Executive only. Do not delay. Do not offend. The last warning felt personal now, as though the system had predicted this exact failure and tried to prevent it. Richard picked up the phone and dialed a number he rarely used, the direct line to the regional director's office. It rang once, twice. Dominion Trust, Regional Administration, an assistant answered crisply. This is Richard Hale, manager at the downtown branch, Richard said. I need Director Sloan immediately. It's urgent. Pause. Director Sloan is in a meeting. Pull her out, Richard snapped, then softened when he heard his own desperation. Please. This concerns an Obsidian client. The pause became longer, the kind that signaled rapid internal calculations. Hold. Richard held, jaw clenched, staring through the office window at the lobby. The security guard was talking to another guard now, gesturing toward the entrance. Two customers had drifted closer to the teller line, pretending to fill out forms while eavesdropping. The phone clicked. A different voice came on, low and controlled. Hale. Director Sloan, Richard said, swallowing, we have a situation. An Obsidian tier client came in. There was a misunderstanding at the counter. Silence. Name. Richard glanced at the screen again. Elias Mercer. The silence deepened into something colder. Repeat. Elias Mercer, Richard said, quieter now. Is he still there? Sloan asked. No, Richard admitted. He left. Another pause, then a single word sharp as a blade. How? Richard's throat tightened. I questioned the check. I assumed it was fraudulent. I reacted poorly. Define poorly, Sloan said. Richard closed his eyes. I laughed. A sound came through the line, not quite a sigh, not quite disbelief. You laughed at Elias Mercer. Yes. Do you understand who he is? Sloan asked. Richard's pride tried to rise, then collapsed. I understand now. No, she replied. You don't. Mercer is not just a wealthy client. Mercer is leverage. Mercer is the kind of person competitors pray will switch banks so they can call it a victory for the quarter. Richard's palms went slick. What do I do? You do nothing, Sloane said. You stay where you are. You keep the lobby calm. You prepare a full incident report. And you do not, under any circumstances, attempt to contact him yourself. I can apologize, Richard blurted. I can? You can make it worse, Sloane cut in. If Mercer wanted an apology, he would have asked for one. He wanted to walk out and see how we respond. That's the test. A test. Richard repeated. Yes, Sloane said. Obsidian clients do not ask for service. They measure it. They walk into rooms without uniforms and watch who reaches for power first. Richard felt the insult land again, but now it came with clarity. He set me up. No, Sloane corrected. You set yourself up. The check was real. The only thing fake was our professionalism. Richard stared at the desk, at the pen set he'd received for a decade of service, suddenly aware it meant nothing. Are we going to lose him? We already lost something, Sloane said. Whether we lose him depends on what we do next. I'm coming down. Compliance is coming down. And legal is being notified. Richard's mouth went dry. Legal? Because if Mercer files a complaint, it becomes a regulatory issue, Sloane said. And because Mercer doesn't just have money. He has attorneys who treat banks the way banks treat customers. Richard's breathing quickened. I didn't mean. Intent is not a currency, Sloane said. Results are. The line went dead. Richard sat for a moment, staring at the phone like it might ring again and offer mercy. It didn't. He stood, unlocked his office door and stepped back into the lobby. The chatter stopped instantly. People looked away then looked back. Richard forced a smile that felt like it cracked his face. Thank you for your patience, he announced. We're experiencing a brief internal verification process. We'll resume normal service shortly. A customer in a navy suit raised an eyebrow. Verification of what? Richard held the smile. Routine. Nothing to worry about. But everyone was worrying now because rumors traveled faster than withdrawals. And somewhere outside, walking through the city like an ordinary man, Elias Mercer was deciding what Dominion Trust deserved. At 11:36 a.m., the first black car arrived. It parked at the curb without a siren or a logo, just tinted glass and quiet certainty. Staff watched as two people stepped out in tailored coats, moving with practiced urgency toward the entrance. Richard recognized the regional director's posture even before he saw her face, and his stomach dropped. Director Sloane entered the bank without pausing, her presence compressing the room. Conversations died mid-sentence. Heels struck marble with intention. Two compliance officers followed her, faces neutral, eyes already cataloging deviations. The black car idled outside like punctuation. Richard straightened instinctively. Sloane didn't look at him. Lock the doors, she said softly. The security guard hesitated. Ma'am? Now. The guard complied. The click of the locks landed louder than a shout. Customers exchanged uneasy glances. A woman clutched her purse. A man in a tailored suit checked his watch, then stopped when Sloane finally met his eyes. This branch is conducting an internal review, Sloane announced. Service will resume shortly. Thank you for your patience. No one argued. Authority that didn't beg never needed to. Sloane turned to Richard at last. Her gaze was clinical. My office. Now. Inside, the glass walls felt like a stage. Richard sat when told. Sloane didn't. You don't look surprised, she said. I am, Richard replied, then corrected himself. I mean, I understand. Understanding comes late, Sloane said. Judgment came early. She gestured to the screen. Walk me through the moment you decided to laugh. Richard swallowed. I saw the amount. I saw how he was dressed. I assumed. That's enough, Sloane said. Assumptions are unrecorded liabilities. They compound. A compliance officer cleared his throat. Director, this client profile indicates discretionary testing behavior. Sloane nodded. Mercer does that. Richard looked up. On purpose. Yes, Sloane said. Not as a trap. As a measurement. He studies systems the way others study markets. He shows up unannounced. He removes signals. He waits. For what? Richard asked. For truth, Sloane replied. For how people behave when they think power isn't watching. The words landed like a verdict. Richard's mouth opened, then closed. He had no defense that wasn't a confession. Sloane turned to the compliance officer. Status. Incident logged, the officer said. Audio pulled. Lobby footage secured. Richard flinched. Audio. Every counter, Sloane said. Every word. Silence pressed in. Outside the office, customers pretended not to stare. Inside, Richard felt smaller than he had in years. Will he complain? Richard asked. Sloane considered. Mercer doesn't complain. He acts. What does that mean for us? It means he decides, Sloane said. And we wait. She moved to the window watching the street. Elias Mercer believes institutions reveal themselves under friction. He introduces just enough resistance to see where they crack. Richard's voice shook. Why us? Because you're large enough to matter, Sloane said, and ordinary enough to forget humility. A knock sounded. A junior manager entered, pale. Director, there's a call. Private line. Sloane took the phone. Sloane. The room seemed to hold its breath. Yes, she said after a moment. I understand. Her posture changed. Not fear. Focus. Yes, she said again. We'll be prepared. She hung up. Richard searched her face. Was that him? No, Sloane said. That was legal. Mercer has requested a meeting. Relief surged, then stalled. A meeting is good, right? It's neutral, Sloane replied. Neutral is dangerous. When? Richard asked. Today, she said. 2 hours. Offsite. He named the place. Where? Sloane hesitated. A cafe. Richard blinked. A cafe. Yes, she said. No conference rooms. No boardrooms. No advantage. She turned to him. You're not attending. The words cut. Director. You already spoke, Sloane said. Your role now is consequence. She gathered her coat. Prepare the report. Full candor. If you minimize, you fail again. When she left, the office felt emptied of oxygen. Richard stared at the screen, replaying the moment he'd laughed, now stripped of context and mercy. He typed, then erased, then typed again, each word a careful admission. Across town, Elias Mercer sat at a corner table, sunlight touching the rim of his cup. The cafe buzzed softly. Students studied. Baristas worked. No one recognized him. That was the point. He sipped his coffee and watched the street, the ordinary choreography of people moving with small urgencies. He didn't think about the bank. He thought about patterns. Institutions believed scale insulated them. It didn't. It amplified flaws. A shrug at the bottom became policy at the top. He had learned that early, building companies by removing ego from rooms and watching what filled the space. His phone vibrated once. A message from counsel. He read it, then placed the phone face down. Elias didn't feel angry. Anger wasted energy. He felt curious. Dominion Trust had revealed something true, and truth was useful. At the bank, the doors unlocked. Customers were ushered through with rehearsed apologies. Richard avoided eyes. Every sound felt too loud. A teller leaned toward him. What happens now? Richard didn't answer. He didn't know. 2 hours later, Sloane arrived at the cafe alone. She spotted Elias immediately. He stood when she approached, offered a seat, nothing more. Thank you for meeting, she said. Thank you for coming, Elias replied. They sat. Outside, a bus hissed to a stop. Inside, a spoon clinked against porcelain. I'll be direct, Sloane said. What would you like to see happen? Elias smiled faintly. I already have. She studied him. And what is that? He gestured to the cafe. You showed up without armor. That's a start. Sloane inclined her head. We failed. Yes, Elias said. But failure isn't the question. Then what is? Whether you learn, he said. And whether you protect the next person who walks in unseen. Sloane held his gaze. What does that require? Elias leaned back. Change. The word lingered between them, simple and expensive. Outside, the city moved on, unaware that a quiet decision was forming, one that would reach far beyond a single laugh, a single counter, a single morning. The word lingered long after Elias Mercer said it. Change. Sloane felt it settle into her chest with weight and precision. Not the abstract change executives spoke about in quarterly memos, but the kind that demanded subtraction before addition. The kind that named people. The kind that broke routines that had grown comfortable. She folded her hands on the cafe table. Change is expensive. Elias nodded. So is stagnation. One just hides the bill longer. Around them, life continued with gentle indifference. Cups were rinsed. Orders were called. A couple argued softly near the window, their conflict small and immediate. Sloane envied them briefly then dismissed the thought. You want policy reform, she said. Training. Oversight. I want behavior, Elias replied. Policy follows behavior, not the other way around. Sloane exhaled slowly. And the manager? Elias did not answer immediately. He watched a man struggle to fold a stroller near the door, then finally succeed. Consequences should match harm, he said. Not optics. He humiliated you, Sloane said. He humiliated himself, Elias replied. I was fine. Sloane studied him. Many powerful people demanded retribution disguised as principle. Elias did not. That made him harder to negotiate with. You're not moving your accounts? She asked. Not yet, Elias said. I'm observing. What are you observing now? How fast truth travels when comfort is threatened, he said. And who protects it? Sloane nodded once. You'll have a response by end of day. I expect a plan, Elias said. Not a promise. They stood. No handshake lingered. No drama punctuated the moment. Elias returned to anonymity. Sloane returned to consequence. Back at Dominion Trust, the atmosphere had curdled into rumor. Staff spoke in lowered voices. Emails marked confidential multiplied. Compliance officers interviewed tellers one by one. Richard Hale sat alone in his office, rereading his report like it might rewrite itself. It didn't. At 4:12 p.m., Sloane called him in. He stood as she entered. Director. Sit, she said. Legal counsel joined by video. Compliance followed. The room felt crowded with intention. Sloane spoke first. You violated client protocol, dignity standards, and judgment expectations. Richard nodded. Yes. You laughed, legal added. Yes. You escalated without evidence, compliance said. Yes. Silence followed. Richard waited for the sentence. You are suspended, Sloane said. Effective immediately. Relief and fear collided. Suspended? Pending outcome, Sloane said. You'll surrender access and leave the premises. Richard swallowed. And after? That depends, Sloane replied, on whether you understand why. Richard met her eyes. I thought authority came from enforcing rules. It comes from enforcing fairness, Sloane said. Rules are tools. People are the test. Richard nodded again, slower now. I failed. Yes, Sloane said. But failure can still be useful. Outside, Richard emptied his desk under watchful eyes. His framed mission statement went into a box. The pen set followed. When he walked through the lobby, no one laughed. No one looked away. He felt exposed in a way wealth never caused. That evening, Sloane convened an emergency board session. Mercer is watching, she told them. And he's right. Silence answered. We audit bias, she continued. We retrain frontline staff. We restructure escalation authority. And we make humility measurable. A board member frowned. That's not standard. Neither is losing Obsidian clients, Sloane said. Another leaned forward. And Hale? He becomes the case study, Sloane replied. Internally. Anonymized. Honest. The vote passed narrowly. By nightfall, Dominion Trust issued no press release. Instead, internal memos went out. Mandatory training scheduled. Protocols revised. A quiet reshaping began. Elias received the plan at 9:03 p.m. He read it slowly. It was thorough. It was costly. It named uncomfortable truths. He smiled. Not because it was perfect, because it was real. Across the city, Richard sat in his apartment, lights off, phone face down. He replayed the laugh again and again, each time hearing it differently. He thought about the man in the hoodie, the calm eyes, the request to verify. He had verified too late. At midnight, his phone buzzed. An unknown number. He hesitated, then answered. This is Richard Hale, he said. Pause. Then a familiar, even voice. Mr. Hale. This is Elias Mercer. Richard stood so fast his chair tipped. Sir, I want to apologize. I know, Elias said gently. That's why I'm calling. Richard swallowed. I was wrong. Yes, Elias said. But that's not why I called. Then why? Because institutions change slowly, Elias said. People change faster. I wanted to see what you'd choose. Richard closed his eyes. I don't deserve. This isn't about deserving, Elias said. It's about deciding. Richard's voice cracked. What do you want me to do? Elias considered. Learn. And if they give you another chance, protect the person they don't look at. The line went dead. Richard stood in the dark, breathing, the weight of the day settling into something like resolve. Across the city, Elias set his phone down and looked out at the lights. Change had begun, not with outrage or spectacle, but with attention. That was always how real power worked. Morning arrived without ceremony. The city woke as it always did, unaware that anything had shifted beneath its routines. Elias Mercer stood by his apartment window, watching traffic knot and unknot itself below. He liked mornings because they were honest. People hadn't yet rehearsed their confidence. Decisions came slower, closer to instinct. It was when systems revealed their true shape. At 6:30 a.m., he poured coffee and opened the overnight reports his counsel had forwarded. Dominion Trust had moved quickly. Too quickly, some would argue. Training schedules, revised protocols, leadership reviews. On paper it looked impressive. On paper most things did. Elias read every line. He wasn't searching for apologies. He was searching for resistance. True change always met friction. People protected habits the way they protected income. If Dominion Trust's plan met no internal pushback, then it was theater. Real reform rattled cages. By mid-morning his phone buzzed again. This time it was his assistant. "They're nervous," she said. "Who?" Elias asked. "Everyone," she replied. "Competitors are calling. Word is spreading that you tested Dominion." Elias smiled faintly. "I didn't test them. They tested themselves. And now we see who learns," he said. Across town, Richard Hale sat in a borrowed office at a smaller branch, temporary assignment pending review. The space smelled like cleaning solution and old carpet. No glass walls. No prestige. Just a desk, a chair, and a stack of training manuals Sloan had insisted he read. He welcomed the humility. The laughter from the bank replayed less often now. In its place was something heavier. Awareness. Every chapter he read about bias, every scenario he studied felt personal. He recognized himself in the footnotes. The unseen gatekeeper. The unchallenged assumption. At noon, Sloan called him. "Walk with me," she said. They met in a quiet park between meetings. The city hummed at a distance. "You spoke to Mercer," she said. Richard nodded. "Yes." "What did he say?" "He told me to learn," Richard replied. "And to protect the person no one looks at." Sloan stopped walking. "Good. Is that all?" Richard asked. "It's everything," she said. Back at headquarters, Dominion Trust faced a different kind of scrutiny. Staff whispered. Managers questioned authority. A senior executive resigned quietly, citing personal reasons. He had opposed the reforms. His departure spoke louder than any memo. Elias noticed. He also noticed what didn't happen. No press leaks. No performative apologies. That restraint mattered. Institutions that chased applause rarely earned trust. On Friday afternoon, Elias returned to Dominion Trust unannounced. This time he wore the same hoodie. The receptionist looked up and smiled. "Good afternoon. How can I help you?" "I'd like to make a deposit," Elias said. "Of course," she replied, standing. "Please follow me." No laughter. No hesitation. At the counter, a young teller verified the check without comment, then called a supervisor as protocol required. The supervisor arrived, calm, respectful, and efficient. "Thank you for your patience," she said. "Everything is in order." Elias nodded. "Thank you." As he turned to leave, the teller spoke again. "Sir?" "Yes." "I just wanted to say," she said, choosing her words carefully, "thank you for waiting. Not everyone does." Elias smiled, genuine this time. Outside he paused on the steps. Change was rarely dramatic. It showed up in small corrections, quiet respect, the absence of mockery. It showed up when someone chose dignity without knowing who deserved it. That evening, Elias sent a single message to Sloan. "Proceed." The response came quickly. "We will." At home, Richard received his own message. "You're reinstated," Sloan wrote. Different role. More responsibility. Richard sat back, exhaling. He understood now. Authority wasn't taken. It was carried. Somewhere between power and humility, a line had shifted. And this time someone was watching. Power rarely announced itself. Elias Mercer had learned that early, long before his name carried weight in boardrooms that never spoke it aloud. Real power shifted quietly, like tectonic plates beneath polished floors. You didn't hear it. You felt it later when the ground no longer stood where you remembered. Dominion Trust felt different now. The change was subtle but unmistakable. Meetings started on time. Interruptions were fewer. Questions that once died in the presence of rank were now allowed to breathe. It unsettled some people. It energized others. Culture, Elias believed, revealed itself not in statements but in what people stopped tolerating. He visited no more branches that week. Watching from a distance mattered. Systems behaved differently when they believed the test had ended. Inside headquarters, Sloan chaired a strategy session that felt unlike any she had led before. The room held senior executives, compliance leads, and 2 external advisors she had brought in quietly. No one joked. No one postured. "We are not reacting," she told them. "We are rebuilding muscle memory." A vice president frowned. "Clients expect efficiency. This slows things down." "Efficiency without fairness is theft," Sloan replied evenly. "We borrowed time for years. Now we're paying interest." No one argued. Across town, Richard Hale sat in a smaller conference room with a group of frontline managers. His new role carried no grand title, but its mandate was clear: oversight of client experience at the point of first contact. He listened more than he spoke. One manager raised a hand. "What if the client is actually committing fraud?" "Then we verify," Richard said. "Without contempt." Another asked, "What if they get angry?" "We stay professional," he replied. "Anger doesn't excuse disrespect. Neither does authority." The words sounded practiced because he had practiced them. Every mistake had sharpened his clarity. After the session, a young supervisor lingered. "Did he really come in wearing a hoodie?" Richard smiled faintly. "Yes." "And you laughed?" Richard didn't deflect. "Yes." The supervisor nodded slowly. "I won't forget that." "Good," Richard said. "Neither should you." At the end of the month, Elias received a call from an unexpected number. "This is Margaret Keene," the voice said. "I chair the Financial Ethics Committee." Elias listened. "We've noticed your influence," she continued carefully. "Banks are adjusting policies. Quietly. Without regulation. That tends to happen," Elias said, "when people remember consequences." "We're inviting you to testify," Keene said. "Off the record. Advisory only." Elias considered. "I don't testify." "Then why answer the call?" she asked. "Because listening matters," he replied. They spoke for 15 minutes. Elias offered no accusations. No demands. Just observations. By the end, Keene sounded thoughtful, unsettled. When the call ended, Elias set his phone down and returned to his notes. He tracked responses the way others tracked markets. A resignation here. Promotion there. Small ripples spreading. At Dominion Trust, the board approved a permanent role for Richard's department. The vote was not unanimous. 2 members abstained. One resigned the following week. Sloan noticed the timing. She met Elias again a month later, this time at the same cafe. He arrived first. She joined him without ceremony. "You stayed," she said. "For now," Elias replied. "And you're satisfied?" "I'm attentive," he said. "Satisfaction ends curiosity." Sloan smiled despite herself. "What happens when people realize you're watching?" "Some will behave," Elias said. "Some will resent it. That tells you who they are." She hesitated. "And us?" "You changed," Elias said. "That's rare." "That's fragile," she countered. "Yes," he agreed. "Protect it." Outside, rain began to fall lightly, blurring the street. Inside, the cafe grew warmer, quieter. At his apartment that night, Elias opened a file he hadn't touched in years. A list of institutions. Notes in the margins. Patterns marked in ink. Dominion Trust had moved from one column to another. Not redeemed. Not condemned. Observed. Elsewhere, Richard walked through his old branch after hours, invited by the new manager to review procedures. The marble floors gleamed as they always had, but the space felt different to him now. Less like a stage. More like a responsibility. A teller asked, "Do you think he'll come back?" Richard thought of the calm eyes, the measured voice. "I think he never really left." The teller nodded, uncertain but thoughtful. Change, Richard understood now, was not an event. It was a line that moved, one decision at a time. Some people crossed it. Others noticed too late that it had crossed them. And somewhere in the city, a man in a hoodie watched quietly, not with anger or pride, but with the patience of someone who knew that systems always revealed themselves in the end. The second test came without warning. That was always how Elias Mercer preferred it. Announced evaluations changed behavior. Silence revealed it. When people believed the watching eye had blinked, truth stepped forward uninvited. It began with a merger. Dominion Trust announced a quiet acquisition of a mid-sized regional bank, Crestline Financial, a firm known less for innovation than for aggressive growth. On paper the deal was sound. Crestline brought deposits, branches and market reach. What it also brought, Elias suspected, was friction. He didn't call Sloan. He didn't send a message. He waited. Inside Dominion Trust, excitement mixed with unease. Integration teams formed. Systems were mapped. Culture decks were drafted. Everyone spoke about alignment, but alignment was always easier to promise than to practice. Richard Hale was assigned to the integration committee. "You're there to listen," Sloan told him. "Not to fix." "Not yet." Richard understood. Listening had become his discipline. At the first joint meeting, Crestline's executives arrived early, filling the room with confidence that leaned toward entitlement. Their lead operations officer, a man named Vaughn, spoke often and loudly. "At Crestline," Vaughn said, leaning back in his chair, "we move fast. We don't overthink customer feelings. Numbers don't care about feelings." A few Dominion managers shifted uncomfortably. Others nodded. Richard said nothing. As the weeks passed, patterns emerged. Crestline managers pushed for shortcuts. Verification steps were framed as inefficiencies. Frontline discretion was dismissed as risk exposure. During one session, Vaughn laughed openly. "If someone walks in dressed like a mess asking for 7 figures," he said, "you slow them down. Period." The room went quiet. Richard felt the old memory stir, sharp and immediate. He looked around the table. Some people avoided his eyes. Others waited, curious. He spoke. "We verify," Richard said calmly. "We don't judge." Vaughn smirked. "Idealism is cute. But scale demands realism." Richard met his gaze. "Scale amplifies behavior. That's why it demands discipline." The air tightened. After the meeting, 2 Dominion managers pulled Richard aside. "Careful," one whispered. "Vaughn has board support." Richard nodded. "Then the board needs better information." Word traveled. Within days, complaints surfaced from Crestline branches now under Dominion oversight. Small things at first. Tone. Delay. Disrespect masked as policy. Richard logged each one, noting not just incidents but responses. He sent nothing to Elias. Elias already knew. Across town, Elias reviewed a separate report from an entirely different source. A community legal clinic flagged an increase in client grievances tied to Crestline locations. Different language. Same behavior. He underlined a sentence once. The unseen test was working. Sloan felt the pressure building before it reached her desk. Executives debated timelines. Shareholders asked about synergy. The word culture was used often and defined rarely. When Richard finally requested a private meeting, Sloan granted it immediately. "They're reverting," Richard said simply. Sloan sighed. "I was afraid of that." "Not everyone," Richard clarified. "But enough. And the ones pushing hardest are being rewarded for speed." Sloan leaned back. "If we slow the integration, we lose market confidence." "If we don't," Richard said, "we lose integrity." Silence followed. Sloan tapped her pen. "What do you recommend?" "An audit," Richard said. "Behavioral. Not financial. Branch by branch. Mixed teams. Unannounced." Sloan smiled grimly. "You've been learning." "I had a good teacher," Richard said. She nodded once. "Do it." The audit began quietly. Crestline managers bristled. Dominion staff took notes. Some defended old habits. Others adapted quickly, relieved to have cover. Vaughn did neither. He called Sloan directly. "This is sabotage," he said. "We're being treated like liabilities." "You're being treated like partners," Sloan replied. "Partners who need alignment." "You're letting one incident dictate strategy," Vaughn snapped. "No," Sloan said. "I'm letting a pattern inform policy." 2 days later, Elias received an invitation. Not from Dominion. From Crestline's board. He declined. Instead, he sent a single line to Sloan. "Patterns repeat until confronted." Sloan forwarded it to the board without comment. The next meeting was brief. Vaughn was removed from the integration team. Officially, it was a restructuring. Unofficially, it was a line drawn. The fallout was immediate. Some Crestline executives resigned. Others adjusted. Branch complaints dropped within weeks. Elias watched the numbers change, then stabilize. One evening, he walked past the same Dominion Trust branch where everything had begun. He didn't go in. He didn't need to. The test was no longer about him. Inside, a young customer argued nervously with a teller about a delayed transfer. The teller listened. Verified. Explained. No mockery. No impatience. Elias continued walking. Systems he believed were never fixed. They were corrected repeatedly by people willing to notice when lines moved. And this time, when the line shifted again, someone was ready to stand on the right side of it. Success attracted attention. That was the part most institutions misunderstood. They believed scrutiny followed failure, that as long as numbers went up, silence would follow. Elias Mercer knew better. Real scrutiny arrived when results suggested something different was happening, when behavior shifted without public explanation. Dominion Trust's internal metrics began to show it. Customer escalation rates dropped. Complaint resolution times shortened. Branch-level surveys reflected something harder to quantify: trust. Analysts noticed. Competitors noticed. Regulators, always slower, began to ask careful questions framed as curiosity rather than concern. Pressure followed. It arrived first through consultants. 3 firms approached Dominion within 2 weeks, each offering to optimize the new culture changes. Each proposal translated dignity into slides and monetized restraint into frameworks. Sloan rejected them all. "You can't outsource conscience," she told her executive team. Some nodded. Others worried. Shareholder pressure came next. A fund manager requested a call, citing concerns about operational drag. Sloan took it. "You're sacrificing speed," the manager said. "Markets punish hesitation. Markets punish exposure," Sloan replied. "We're reducing it." There was a pause. "You're confident this pays off?" "I'm confident it lasts," she said. Inside the organization, the strain showed in subtler ways. Managers used to unquestioned authority felt watched. Some resented it. Others adapted, discovering that leadership without intimidation was lighter to carry. Richard Hale felt the weight most acutely. His role had expanded again. He now oversaw integration standards across all newly acquired branches. The responsibility was quiet but enormous. He spent his days traveling, listening, documenting. He learned how quickly good intentions eroded under deadlines. At a Crestline branch in a small industrial town, a teller pulled him aside. "They told us Dominion was different," she said. "But my supervisor still decides who gets respect." Richard nodded. "Show me." They did. Transaction logs. Recorded calls. Language patterns that skirted policy without violating it outright. Respect denied through tone rather than rules. "This isn't obvious," the teller said. "That's why it keeps happening." Richard felt a familiar tightening in his chest. "You did the right thing by speaking up." "Will it matter?" she asked. "It will," he said, meaning it. That night, Richard sent a detailed report to Sloan. He did not soften it. He did not dramatize it. He trusted facts now more than rhetoric. Sloan read it at midnight. By morning, 2 supervisors were reassigned. One resigned within hours. The branch manager called it unfair. Sloan did not respond. Elias learned about the action through a different channel entirely. A nonprofit he quietly funded sent him a note thanking him for the ripple. He stared at the word longer than he meant to. Pressure points existed in every system. Push them long enough and something always gave. The question was whether what broke was rot or structure. The real test arrived 3 weeks later. A high-profile client, famous enough to be recognized, wealthy enough to be indulged, caused a scene at a Dominion branch. He demanded exceptions. He insulted staff. He threatened to take his business elsewhere. In the past, the response would have been immediate appeasement. This time, the branch manager refused. Calmly. Politely. Publicly. The incident went viral. A short video circulated online. The client shouting. The manager standing firm, respectful but unmoved. "We'll verify your request like everyone else," she said in the clip. "That's how fairness works." Commentary exploded. Some praised the restraint. Others warned of arrogance. Financial pundits debated whether Dominion had overcorrected. Sloan watched it unfold without comment. The client closed his accounts. The stock dipped 2%. The board called an emergency meeting. "This is exactly what investors feared," one member said. "We're choosing principles over profit." Sloan looked around the table. "No. We're choosing durability over volatility." "That sounds nice," another snapped. "But markets don't reward morality. They reward trust," Sloan said. Eventually, the vote was close. Again, they held the line. 2 days later, something unexpected happened. Another client, larger, quieter, more influential, publicly moved his accounts to Dominion Trust, citing predictable fairness as the reason. The announcement wasn't flashy. It was deliberate. The stock rebounded. Elias read the news over breakfast and nodded once. Not satisfaction. Confirmation. Later that week he met Richard briefly in a public place, by accident or design unclear. "You're tired?" Elias observed. "I am," Richard admitted. "Good," Elias said. "Fatigue means you're paying attention." Richard hesitated. "Do you ever step in directly?" Elias considered. "Only when silence would lie." Richard absorbed that. As they parted, Elias glanced back once at the flow of people moving past unnoticed, each carrying assumptions like invisible luggage. Pressure points never disappeared. They shifted, waiting for complacency. For now, Dominion Trust was still holding. And somewhere between scrutiny and resolve, the institution learned the cost of standing firm, and why paying it was the only option that didn't compound later. Silence is never empty. It gathers weight. 4 weeks after the viral incident, Dominion Trust moved under a strange calm. No scandals. No dramatic wins. Just steady numbers and careful decisions. To the outside world it looked like stability. Inside it felt like pressure building behind glass. Elias Mercer noticed the difference immediately. His reports grew quieter, not because nothing was happening, but because people were choosing their actions more carefully. Silence like that was not peace. It was anticipation. The break came from a place no one expected. A whistleblower. The email arrived at 2:41 a.m. in Elias's encrypted inbox, routed through layers of anonymity. He read it once, then again, slower. The subject line was simple. Crestline wasn't the only one. The sender didn't ask for protection. Didn't ask for money. They asked one thing only. "If I speak, will it matter?" Elias leaned back in his chair, staring at the ceiling. He had learned long ago that the most dangerous lies weren't told loudly. They were embedded in routines, normalized through repetition. He typed a reply. "It already does." By morning the documents followed. They outlined a pattern older than the merger. Selective enforcement. Quiet profiling. Internal memos that never used explicit language but made expectations clear. High-risk presentation. Low-value engagement. Words designed to sound neutral while doing damage. The name surprised him. This wasn't limited to Crestline. The behavior predated it. Dominion Trust had not been infected. It had been exposed. Elias forwarded the files to Sloan with a single note. "Your foundation is stronger than you thought. That's why this will hurt." Sloan read everything in one sitting. By the end, her hands were steady but her jaw was tight. She recognized the handwriting of the institution she had inherited. The compromises no one remembered making. The shortcuts justified by time pressure and market share. At 9 a.m. she called an emergency executive session. "This does not leave this room," she said when they were seated. "Not yet." The room buzzed with unease. A senior executive skimmed the documents and scoffed. "This is old. Historical. Patterns don't expire," Sloan replied. Another spoke up. "If this gets out, we're finished." "No," Sloan said. "If this stays buried, we are." Silence fell again, heavier now. "What do you propose?" someone asked. Sloan did not hesitate. "We investigate ourselves. Publicly." A murmur rippled through the room. "That's suicide." "That's leadership," she corrected. Across the city, Richard Hale was already feeling the tremors. Branch managers were tense. Supervisors requested clarifications that didn't exist yet. The ground was moving again. When Sloan called him in, he understood before she spoke. "We're opening the books," she said. Richard exhaled. "All of them?" "All of them," she confirmed. "And I need you visible." He nodded slowly. "People will blame me." "They already do," Sloan said. "That's why you're credible." The announcement came 2 days later. Dominion Trust issued a statement acknowledging a historical pattern of biased client treatment and announcing an independent review with full regulatory cooperation. No excuses. No deflection. Just facts. Markets reacted immediately. The stock dropped sharply. Media swarmed. Competitors smiled too early. Inside the bank, fear spread like cold. Employees worried about jobs. Managers worried about exposure. Some executives prepared resignations. Others prepared defenses. Elias watched the news without expression. He had seen this moment before. The point where institutions decided whether truth was worth surviving. Richard spent the next week in interviews. Not as an accused but as a witness. He spoke plainly. Owned his failure. described the system without dramatics. I wasn't evil, he said at one point. I was comfortable. That was worse. The quote made headlines. Some praised him. Others mocked him. He didn't read either. At night, he wondered if the line had finally crossed too far. Sloane stood before regulators with nothing but documentation and resolve. She answered every question. Offered no legal gymnastics. The room shifted from adversarial to cautious respect. This is unusual, one regulator admitted. Most institutions deny until forced. We forced ourselves, Sloane replied. The cost was immediate. Bonuses frozen. Projects delayed. Reputations bruised. The benefit was slower. Weeks later, an op-ed appeared in a financial journal, unsigned but unmistakable in tone. The rarest asset in modern finance is not capital. It is institutional honesty. Analysts recalibrated. Investors reconsidered. Some left. Others arrived quietly. Elias received no credit and wanted none. Late one evening he stood again outside the original branch watching people move in and out. Ordinary people. Unseen people. Inside, a new sign hung behind the counter. It wasn't corporate. It wasn't polished. It read, "Verification without judgment." Elias smiled faintly. Silence had broken. Not into chaos but into clarity. And once truth entered a system openly, it became very difficult to remove again. The last phase did not arrive with applause. There was no moment where Dominion Trust was declared redeemed, no headline that crowned it transformed. The market stabilized slowly. Regulators concluded their review with measured language. Some penalties were imposed. Some executives departed. Life continued, altered but intact. That was how real endings worked. They did not announce themselves. They settled. Elias Mercer stood once more in anonymity, this time not outside a branch but inside a crowd. The annual financial summit filled the convention hall with polished certainty. Men and women in tailored confidence spoke about resilience, innovation, future-proofing. Words were abundant. Meaning was selective. He did not attend panels. He watched hallways. It was there that truth lingered, how assistants were treated, how junior analysts were spoken over or listened to, how status moved through space like gravity. Institutions did not change on stages. They changed in corridors. Across the city, Richard Hale prepared for his first public address. He did not want it. Sloane had insisted. "You don't represent perfection," she told him. "You represent correction." The room was modest. A training auditorium filled with managers, tellers, supervisors. No press. No cameras. Just people who decided daily, who felt welcome and who felt small. Richard stood at the podium, hands steady. "I once laughed at a man because I thought I understood the world," he said. "I didn't." The room was quiet. "I thought authority meant control. I thought professionalism meant distance. I was wrong." He paused, letting the truth land without cushioning. The most dangerous thing in any institution is unexamined confidence. Not malice. Not greed. Confidence that assumes it's right because it's familiar. He told them the story stripped of drama. The hoodie. The check. The laugh. The silence that followed. "I don't share this to shame myself," he said. "I share it to warn you." No one shifted. No one whispered. "You will be tired," Richard continued. "Fairness takes effort. It slows you down. It forces you to question instincts that once felt efficient." He looked out at the faces. Some young. Some hardened. All listening. But the cost of not doing it is always higher. It just arrives later. When he finished, there was no applause. There didn't need to be. Afterward, a teller approached him. Nervous. Honest. "I didn't think it would matter," she said. Speaking up. Richard smiled gently. "It always matters. The system just decides when to admit it." That night, Sloane sat alone in her office, lights dimmed, the city glowing beyond the glass. She reread the first internal memo she'd written after Elias Mercer walked out of the bank. The words felt distant now, like the handwriting of a former self. Her phone buzzed. A single message. "You held." She didn't need to ask who it was. She replied simply, "So did you." Elias read the message at home, standing by the same window where he had watched the city wake weeks earlier. The traffic below moved with familiar rhythm. Nothing about the skyline had changed. And yet, something fundamental had. He thought of all the systems he had encountered in his life. Companies, governments, communities. Most resisted truth until it arrived with force. Very few invited it in quietly. Dominion Trust had not been perfect. But it had been honest. That distinction mattered. Elias closed the file he had kept open for months. Notes, patterns, observations. He archived it not because the work was finished, but because it no longer required his attention. Someone else was watching now. At the original branch, the day ended like any other. Counters closed. Lights dimmed. A janitor mopped the marble floor that once echoed with laughter. A woman walked in just before closing, anxious, unsure, holding paperwork she didn't fully understand. She wore clothes that signaled nothing to those trained to look for signals. The teller smiled. "Let's take a look together," she said. No judgment. No haste. Just process. The woman exhaled. Outside, the city carried on, indifferent as always. Power had not announced itself. Justice had not declared victory. But a line had moved. Not permanently. Not safely. Lines never stayed still. They required people, tired people, imperfect people, willing to notice when silence weighed too much, when laughter revealed ignorance, when dignity needed protection without knowing who stood before you. That was the measure that remained. Not wealth. Not reputation. Not even reform. But the quiet decision made again and again to verify without judgment, and to remember that the most important test in any system was not who walked in known, but who walked in unseen. H entered a system openly, it became very difficult to remove again. If you believe power doesn't always announce itself, if you believe respect should be given before wealth is proven, and if you believe the quietest decisions often change everything, then this channel is for you. Here we tell stories where arrogance collapses, dignity stands firm, and truth reveals itself at the perfect moment. Stories about billionaires who don't boast, institutions that are tested, and people who learn too late that judgment has consequences. Subscribe now, not for noise but for meaning, because the next story might remind you why character still matters.